good morning. It's Monday the 21st of November. This is the Phoenix Blue update brought to you this morning by Tom Colley. We had a busy week last week in terms of the dollar. We had an ongoing dollar strength. We broke through a very significant level, which was a 13-year high. We'll have a look at that chart in the moment. Let's go over to the news. We've got a much quieter week on the news front this week. Quite a lot of news out last week, some of which drove the dollar. This week we have a US Thanksgiving bank holiday on Friday, which is their biggest bank holiday as such, so we will expect to see certainly that taking an effect on the markets and potentially profit taking before that. Between Monday and Thursday, a lot less news in the market. We have the FOMC meeting minutes. We don't expect a great deal extra out of that or that to have any significant change. It was the pre-election meeting. We didn't have a press conference, and we've had Janet Yellen speaking since then. Okay, so today, 4 p.m, Draghi is speaking to the European Parliament in Strasbourg, specifically about the ECB annual report. We'll be looking to see if anything comes out of that. Key meeting for the ECB is next month, a week ahead of the Fed. They have quantitative easing measures in place that so far are only timescaled out to March of 2017, so coming towards the end of those, although Draghi very specifically said that the euro area would require the ECB measures to be ongoing in order for a recovery to continue. We are anticipating that we will get an extension of the programs at the next meeting ahead of the Fed meeting the following week. Okay, let's go over to the dollar index and see where we were last week. This is the monthly chart. What I wanted to really just is emphasize how big a level we broke through last week. Clear, this is the level I'm talking about, the green zone here. But what's significant is going back over here is this big gap here and breaking these highs here, which were 13 years ago. The next level of resistance we see is at around this level here, which is around 101.50 sort of area. So we're somewhat in new territory within recent times. That's why that was so significant. We were looking and anticipating a potential correction at this level last week. That correction didn't take place and the dollar just surged on ongoing good news for the US economy. If we go down to the daily chart, this is what we're looking at the moment. This is the next monthly level, slightly higher actually than I said, maybe 101.70, 101.80. What we are anticipating this week is a correction back to these previous highs through here, about 100.50. We're prepared for price to go to the long side first before pulling back and correcting to this level here. This is such a significant level that we only see potentially a short-term correction to that point. We will potentially take advantage of any dollar weakness or short-term dollar weakness on an intraday basis if that happens. If this level is broken, then we will need to reassess, because then there is potential for more downside on the dollar, now, which isn't unheard of following a US presidential election. It's traditional to see a bullish move on the dollar index followed a couple of weeks later by a bearish move. So we'll be watching for that to play out, and we'll be correlating this level of when we get to it with the other majors and minors in terms of getting entries to get back on that dollar strength train based on the measures that are thought to be on their way from Trump, based on the markets already effectively pricing in the Fed rate rise in December. Certainly if that rate rise wasn't to happen for any reason, then all bets would be off and we could see some really volatile downward movements on the dollar side, because the market is so certain now that post the election that will happen. It was pretty certain before, but the expectation's even greater now. If we go across to the yen and look at that in comparison, we're in a similar position here. Yen's been one of the weakest currencies against the dollar strength. It's had a really big long side move there, which is obviously a yen weakness. Again, we'll be looking for a correction back to this level around, I think that's about 109.25, something like that level there. Key support through here and touches on that zone. So we'll be looking for that pullback there to take that back to the long side, but only in conjunction with the dollar index. If we see anything else, again, bets will be off, and we'll be looking for other signals to potentially trade the short side to the dollar. Over on the euro, exactly the same. We're down this time at one of two zones I've got marked on the euro here. We anticipate the euro pulling back to the long side, bit of euro strength as the dollar index pulls back before going back down to the short side. Mentioned Draghi already at the European Parliament speaking today, and also we have the forthcoming ECB meeting next month. If the dollar strength plays out, then we clearly see moves below these lows, and maybe through next year a move back to parity, i.e. euro US dollar at 1-to-1. Over on the pound, well, this is if the dollar gives us our short-term pullback this week, it gives us our opportunity to take advantage of some pound strength here. The pound has been the strongest currency into the dollar onslaught of the last few weeks. Only last week did it really pull back, having even following the election, having continued to go to the long side. So we will be looking for intraday possibilities on the pound, and also be closely watching all the pound cross pairs for any key levels that pound strength will break, and give us an opportunities in those markets to take advantage of that pound strength. Again, only until we see the dollar moving back into a strengthening position itself. The last chart that I am going to show you on the currencies today is the Aussie. Again, we've got a nice level here. We've already got, this is today's bar, so we can't rely on it, but at this moment in time we're seeing somewhat of a reversal off that level. We've got a very key level and a very clear level above it here. So once again, if we have the opportunity on that dollar pullback to take that to the long side as a contrarian trade, we will do that, but we're looking predominantly and we'll take a full risk trade, assuming everything else stacks up, where we'd look at a lower risk trade on that contrarian trade. We will be looking to take trades to the short side to see new lows on the Aussie dollar, and potentially also the New Zealand dollar, that we're a little cautious on that at the moment. We didn't see any sort of pullback on this rundown here. We did at least have some sort of consolidation pullback there. We didn't see that on the Kiwi. There has been the earthquake in New Zealand, and the results or the impact of that are taking time to play out. There has been a lot of news items have been withheld or delayed, so we're not really looking at a true picture at the moment. So our advice is to avoid the Kiwi until that picture settles down, and those that news data is brought up to date, and potentially we see how what the economic effects are going to be on the massive earthquake. The other markets we're clearly interested in at the moment are all the equities markets. The US equities are, this is the S&P 500, approaching all-time highs. We anticipate seasonal movement through to the end of the year on virtually every equities market. We're seeing the DAX at a key level. The Nikkei 225 has actually broken above its key level, and we'll be looking for a clear move above and looking for a pullback to take that to the long side through to the end of the year potentially as well. So some opportunities potentially lying up there, but we are treading cautiously. It's all about the dollar at the moment. As I've said, we've got the bank holiday at the end of the week. We've got a lack of data. This may be an opportunity for traders to take profits in that marketplace and give us the short-term correction that we're anticipating. Okay guys, that's it for today. We're over in Norway tonight. I think it's probably too late to be at that event, but if you are interested, if you email us, probably best to do a direct email at to info@phoenixblue.co.uk. Or you can always go through the website to do that. The next events will be announced shortly, but these are events where you can come down, sit down with a trade for 3 hours, or alternatively, if the markets are quiet, we don't waste the time. We'll go through analysing the markets. We'll show you how we analyse the markets, how we look at the markets, how we take into account fundamentals, technicals, and also the commitment of traders. Okay guys, so another week to be cautious. We need to see what that dollar's doing. We'd like to see that correction this week, and then a move back to the long side would open a lot of opportunities for us going forward, as that would suggest that there is a concerted move on the dollar to that long side. Okay, trade carefully, and we'll speak to you tomorrow.